What's going on, investors? I'm doing another video of the stock market to briefly give a description of the things that I look for in the stock market. And one of the biggest questions that I get is how do you start, or what are the things that you look for, or how do you know that the stock is gonna move up or down? Um, how do you calculate? And I want to start by saying, guys, that there's a lot of technicals that I use personally. So I'm gonna explain the three things. Like 5 things that I use for my trading, and the accuracy of this trading, that this method that I use is highly I highly recommend it because it has worked for me, and I feel that there's a lot information out there that if you look for it, it's crazy amount of information. But I'm gonna briefly give description of the things that I use. So first of all, I want you to see that Tesla. I wanna discuss first of all about your broker. In order to day trade or to invest, you have to open a broker, whether it's Robinhood, Webull, TD Ameritrade, Charles Schwab, or any other broker. I do recommend for you to open TD Ameritrade if you really want to invest and make like huge amount of money. I do also recommend Robinhood, but there is a lot of lag in that app. However, I have made money in Robinhood, so I don't highly recommend it, but I still recommend it to the point where you're still able to make money through that app. It just lags a little bit more. But back to my point, I want you to, right here is Tesla. For those people who don't know what Tesla is, I hope you know. Is the EV vehicles, electric vehicles. So recently, it has been running up, and I want you to know what triggers this movement. How do you know like it's going up, it's going down? All right. So first of all, one of the most important things in trading is knowing what investors and what institutions are doing. If you don't know what institutions are doing, then you probably won't know what to do. And first of all, the first thing I want to explain that is very important, I think that is volume. You need to understand that the volume is very important in a stock. Why? Because it's important to have liquidity. If you have no liquidity, then it's going to be hard for you to get in and get out of your trade. Liquidity is the amount of people, or volume is the amount of people or the amount of traders that are exchanging the stock. Meaning, if like for instance, right over here, I want you guys to see that way you guys know what I'm talking about. Right here, compared to right over here, you can see a lot of difference in the volume. Matter of fact, when you go to this volume, this bar actually, it tells you the volume over here. It tells you right there the volume. So that's how many trades, how many shares were traded that day, or during that specific time. And I want you, it's a whole lot though, but I want you to compare that one to this big bar. You see, is the double of it. Double, smaller, smaller, double. And I want you to correlate this amount. The volume is good volume, however, it's not enough volume to push the stock higher. However, the next day, as you can see, there's a lot more buyers, volume. The stock ricochets to the top. I know it looks like 3 bars, but it is actually a lot of money. especially in options. I want you to see that at the open, 263, and it went all the way to almost 380. So it was almost a $20 move, which is a lot of money in options, especially if you're trading options. But that's another lesson. So one of the things that it is very important for you guys to understand, that you have to have a stock where there's liquidity, where there's volume. If there's no demand for the supply, then the stock is not going to move. So first thing, volume. I have this correlated to the amount of sorry about that, that was wrong. I have this correlated, for instance, if the volume is green, that means that they're buying the stock. If the institutions are selling, that means the stock is gonna probably drop, or there's a sell at that specific time and moment. It doesn't mean that the stock is gonna continue to move lower. It's just letting you know, it's informing you that at this point there has been people selling, a massive amount of people selling rather than buying. That's all it means. So it indicates what's probably the next move. So it's important for the green to be higher than the red if you're trying to make money in the upside. And what I mean by the upside is that means that you're trying for the stock to go higher and higher. You always want to see the green bigger than the red. Why? Because it means that there's more people buying than selling at that moment. So it's important to have volume. Second thing that I see, and actually, yeah, it's kind of like the second, you have to have news. That's why my news is right over here. That's why it's important for you to read. Right here is the news. It updates as day goes by, which that's why the reason I like TD Ameritrade, because if some bad news comes out, I can easily exit my trade before I start losing money. So second thing that I look at is the news. I have to have some type of catalyst in order for the stock to move higher, or if I'm shorting the stock, I'm expecting, or I would rather have bad news if I'm shorting the stock. So second thing that is important is watch the news. You don't have to read everything. You just, it sure will help you to read the news of what's going on with the company. So just whenever, read a little bit about the news, if everything's okay, then the stock probably is going to be okay. So it's very important for you to see the news. The third thing that I see is a MACD. This is important because it tells you divergency. So every time the RSI is this high, it doesn't mean that the stock is not going to move higher. As you can see, it kept going higher. It just means that it's reaching its peak at that moment, and it's more likely to get a small pullback. And you can see small pullback. It's not even a pullback. It kind of remains flat for the rest of the day. So this is just letting you know, I've reached my top. I need to go lower or flat. So it went a little lower. Notice it didn't go under over here. So that's another thing. Right over here, you can see it went under. That means it's bearish. But I'll get to that later on. So this means that it's still afloat. A small pullback is healthy, and it starts moving back up. Every time that it peaks right here, it goes a little down and up. The thing is that you have to understand that it never reached again this high. Every time it tries to reach that high again, it kind of pulls back and it starts to get flat. That is dangerous. That is dangerous, guys. Every time that it reaches the top and it never breaks that top again like it did, that is dangerous. That means it kept popping up, but it never went higher than its previous. That doesn't mean has nothing to do with the stock moving higher. This is divergency, meaning the stock is not gonna be able to break this higher. That's nothing to do with the stock, guys. Remember that. It's just letting you know that divergence now is not as bullish as it was once. So, and you see, so one top, two tops, three tops, four tops, flattens, crashes, boom. Nothing out of the extraordinary. Nothing. We can see that. We're patient. We see that it hasn't broken that bullish factor over here. Resistance. Why is it flat? There's a crash coming. Crash. Well, it's not a crash. It's called a pullback. Crashes when it like goes real bad down. However, you can see then that the stock kept moving up, and that is due to the volume. Volume was bigger than the red volume. Therefore, it was moving higher. However, there's divergence, so it's important to keep an eye on this. Not because the stock is going higher means that it's gonna keep going higher. It's very important for you guys to understand that. Now, the next indicator that I use is gonna be the RSI. The RSI tells you when something is overvalued, overpriced, or oversold. When the RSI, or this indicator, relative strength index, tells you that it's above 70, that means that it's overbought, meaning overbought. But I want you to see something very interesting. It's just like that divergence. Top right here at, let's say, right here. I want you guys to look at that. Let me get further. I know you can't see the small details into it, but I want you to see this. Top. Lower and lower, boom, crashed. Why does this happen? Well, it's simply the fact that it's a healthy pullback. Although it looks really bad on the red side, you see, those people who bought puts right here made a lot of money. But it's still called a healthy pullback. And right now it's trading at 414. We can still see another $15 drop tomorrow to 400 and even further down. Why? Because the stock really rallied up. It ricocheted to the top really fast, and that's not good. That's not good, guys. So I'm bullish on Tesla, but I do feel that it's gonna go lower to 400, and it will. Look at this. Tomorrow's gonna pop and gonna fade. Just watch. I guarantee you. So anyways, the RSI didn't mean that the stock was gonna keep moving up. It's just letting me know that every time that it's oversold at 80, and it's not above that. Sorry guys, I want you to really see it right here. Boom. Follow the line. Boom, 83. Has it breaking 83 again? Nope. It actually double top, triple top, 1, 2, 3. After that, it went down and never broke that 83 again. I guarantee you. Look, right here, right there. Follow. 78. I'm telling you guys, it's not rocket science. You just gotta be very patient with the market. And if you get emotional, you will lose money. So now it's oversold really bad. However, I still think that it's gonna go lower. So we'll see what happens tomorrow morning. That's some of the indicators that I use. Now, I want you to see this. All these indicators are based on my study, in the knowledge I have. And I read a lot of books. Not really read a lot of books, but I want to say 2 books. Um, I've seen a lot of information. I did a lot of research. You know, guys, I'm not a financial advisor. I want you guys to understand that I'm not a financial advisor. That everything that I do is for entertainment purposes. Um, so keep that in mind, guys. But like I said, now I want to talk about this platform. This platform, and by platform I mean the broker. All this that you see right here, all those news and all this is stuff that I added. Look, let me show you what I mean by I added. L2. It's, you see that popped out. Why? Because that's information. That's how I made my platform. You know, whenever you open TD Ameritrade, they don't give you this platform like this. You have to add all these futures. Like, it doesn't have none of that. It comes plain, like there's nothing. The volume is not the color of the stock, or vice versa. So all this you have to make it yourself. So I made a lot of research, and this is the indicators I came with. Now, this is not the only indicators. There's a thousand and thousands and thousands of indicators. So this has worked for me, and it's gonna keep working. Another indicator that I like, and I don't trade without it. Is this, and I think I explained this before. The 200 moving average, which is my blue line, my 50 moving average, which is my white line, and my 20 moving average, so which is my yellow line. I want you to understand something. Whenever the 200 moving average, my line 200 moving average, is above my 50 and my 20, that means, guys, that the 200 moving average is a further and stronger indicator, and it will act, listen to me, guys, it will act as resistance if my blue line is above the stock. So, and I'm going to explain this right now. But this is the best time to buy a stock. But I'm going to explain what happens. Whenever I have my 200 moving average and my 50 moving average and my 20 moving average moving down, let's say this line and this line were up here moving down, that means the stock is gonna keep moving down. Okay, let me show you what I mean by that. Right here, you see how my 200 moving, if my 200 moving average was over here, that means the stock is gonna keep moving down. If my 200 moving average is over here on top of the 50 and 20 moving average declining, that means the stock is gonna keep moving down. Since my 200 moving average is down over here, but my 20 and my 50 moving average is above, that means that this will act as support, guys, not like resistance no more, but as support, and this will act like resistance. So this is gonna continue to move down, and this is gonna act like support. So once, if my 200 moving average can't so make this a support, then it crosses, that becomes a death cross. It's called death cross. When, I'm gonna repeat that because it's very important, guys. When my 50 moving average, that means that white one, crosses my blue line, that means it has created a death cross. A death cross means the stock is gonna drop further down. However, if the 200 moving average, which is my blue line, is acting as support, the stock may bounce from my 200 moving average. So it can go like this. From here, tomorrow it bounces, it ricochets to the top, and it keeps going further and further up. Because my 200 moving average is acting as support. So when this is support, it's going to move up. And it wasn't able to break the support. If it's not able to break the support, it's going to bounce and the stock is going to keep moving up. That's why whenever it's close to the 200 moving average, it's very important, because that's where the explosion comes. And I'm going to show you right now that is true. Okay, guys? So there's two things that could happen right here. If the 200 moving average breaks and it doesn't act as a support, it is going to go further down, and that is called death cross. Now I want you to see something. Whenever the stock is up over here, it will act as resistance. You see what you get? You know why it didn't break through? Because this was as resistance. But guess what? The 200, the 20 and the 50 moving average was down, trying to break through this resistance. Right here is resistance. This is acting, the 20 moving average and the 50 moving average is acting as resistance. Every time that the 20 and the 50 moving average is above the stock, below the stock. Sorry guys, let me repeat this. Every time that the 50 moving average and the 20 moving average is below the stock, the stock, that means it's acting as support. Right here, you see why this dropped? Because it was above. So whenever it's above, it causes the stock to drop. But it gathered itself and started moving out. So this is the time to buy. Whenever you see this divergence, the 200 moving average and the 20 and the 50 moving average below, that is the time to buy, because it's about to cross. When you see this so close like this, it's gonna ricochet to the top, because now there's divergency and it's about to move up. So right here, whenever the 50 moving averages, the 50 and the 20 moving average crosses the 200 moving average, right here you can see that. Whenever that crosses, that is called golden cross. Golden cross. Whenever it breaks resistance, it's called death cross. And whenever it breaks resistance to the upside, it's called gold cross. Hopefully guys, this is not so confusing. That's why I'm repeating myself so much. I don't want to sound annoying, but I want you guys to know what I'm talking about. Whenever the death cross happens, expect a explosive move up. Boom, keeps moving up. Keeps moving up. Boom, keeps moving up. All right, and it kept going up. Why? Because it happened the death cross. Death cross happened right over here. Death cross happened right here. That means that 20 and the 50 moving average crossed the resistance of the 200 moving average. Golden cross. That's gonna go up. However, whenever the 20 moving average is far away from the 200 moving average, it's gonna act like a rubber band. What I mean by a rubber band, that means that the stock is gonna, you can only stretch, guys, the rubber band so much apart that if you stretch it so much, it's gonna snap back. It's gonna snap. So that's what happens. Whenever the 200 moving average and the 20 moving average is way too far apart, that means it has to snap back. It has to come back. It has to. There's no way that it's gonna keep going up. So it's the time of calculating how far it can. So right here, boom. You see that? Boom. Now it's close. Now it's very close. Now it's closer. Now it's closer to the 200 moving average. And tomorrow it's probably gonna go lower than this. I'm expecting the stock to tomorrow morning to go up and then fade it again and keep going lower, because now this is acting as resistance and this is support, but it's coming. This is the same thing as this, but the other way around. This is happening, but the other way around over here. Right over here. Once this is right here, once all this crosses, that's death cross, the stock is going to drop. It's going to go to 400. So remember, guys, that the 20 moving average can't get too far apart from the 200 moving average, because there's going to be a snapback. And here you see that snapback. Now calculating is very difficult. You might be saying, well, how do I know it's going to be if it's been running for days? Well, divergence right here, when you start looking flat, hey man, something's wrong. Hey, it hasn't touched new highs over here like it once did over here. What's happening? Here it is. Boom. Right here. And this is just 1, 2, 3, 4, 5, 6, 7 days. So that was 7 days. The run was 7 days, and then it sold off. So it's important to know those tips, guys. So if you have any further questions, shoot me a message. Ask me directly questions, because you guys are saying like, oh, teach me. I mean, well, what exactly do you want to know? I mean, there's a lot of information that I can give you. Whether you want to trade penny stocks, options, futures, forex, there's a lot of information. So be specific about your questions, and let me know. All right, guys, have a good night.